real quick before we hop into the property management company, as an agent, let me ask you a question. If you were a listing agent on a $1.2 million property, would you take the offer that's putting more money down than the less money down? I'm not a real estate agent, so I'm asking this question for my own knowledge. What would you prefer? And Cindy, you're the only one with your camera on, so I'll go with you if you can answer that.
Um, I think I'd have to look at all the other terms. I don't know that more money down or less money down. I mean, if it's all equal, if they're both conventional loans and, more money down would be obviously better because that makes me feel that the person is more qualified. But I actually call the mortgage broker like the minute
Nice.
we have an offer come in that we think we're going to accept. I call the mortgage broker to try to find out if that person's a solid person before we even go down the road.
Okay. And I love that. And Jenny on our team, she just joined us a few months ago. She was like, "Hey, did we ever just reach out and let them know?" But we got to be careful on what we say, right? About the customer because we got to protect their private information. But I want to show you something because um, it's not always more money down that's best for the client. So let me give you a screen share here. And I ran these numbers the other day. So, and what I'm going to show you is if you look here, there's a $6.6 million difference between what I'm going to show you, not in the favor of the customer put more money down. Can you guys see my screen?
Yeah.
Okay.
Yes.
That's over 30 years, but say they didn't have 30 years. Over 15 years, it's a $1.5 million difference, not in their advantage. And over 5 years, it's a $580,000, I would say, loss, not in their advantage. And I'll walk you through why. So say somebody was buying 1.2 million. Now we're not talking first time home buyer, obviously. We're talking about somebody who's already established, but they wanted to pull the money out of a brokerage account, right? So if they do 20% down, they got to pull 240 out for the down payment versus say putting $600,000 down, 50% down. And say their mortgage rate was 6.625. Well, they're going to have to pay capital gains on the money that they're pulling out of that account. So on the 20% down, they're gonna have to pay $36,000 in gains. On the 600 grand, they're gonna have to pay $90,000 in gains. That's a penalty that they're paying for pulling that money out to put more money down. And some people are like debt averse. They don't want debt and they don't know how to leverage debt in their favor. But the difference between the 600 and the 240 is this $360,000. Now, I said, what's the average rate of return on the stock market over the past 50 years? And it was 10.2%. I'm using that as an example here. I'm not saying they are guaranteed to get this, but just using that example. Home appreciation rates in Washington County, where we're at, this area is usually about 3.4. The difference between putting 20% down and $600,000 down is, 6,100 on the 20% down, 3,800 on the $600,000 down. It's like $2,300 a month. But I netted everything out. The home's going to appreciate in value regardless of whatever's owed on it. So in 5 years, that $1.2 million house is now worth 1.4. So they gained $218,000 worth of equity. In 15 years, it's worth almost 2 million. So they gained almost $800,000 just by owning a property. And then in 30 years, it's worth 3.2, and that's 2.2 million more, or actually 2 million more than what they bought it for. That's just the appreciation rate. Now, if we invested that difference, and this is the net wealth, so I did all the deductions for it. That's here. So that invested value over 30 years at 10, that $360,000 difference at 10.2% becomes 6.6 million. Right? The home value is 3.2. So their total net worth with only 20% down ended up being 9.9 versus the 3.2 million, which is the $600,000 down. Do you guys see that? Does that make sense?
Yeah.
Yeah, okay. Because oftentimes people are like, hey, I want to put more money down. And I'm like, wait a minute, let's look at the whole picture. And we had somebody yesterday, they're like, hey, I'll look at any option you want as long as it's not with MI and it's 20% down. And I said, okay. And I shot them a short video with 5% down. I said, you can't spend the money in the walls of the house if something happens. But if you invest that difference, it's liquid, you have access to it. And although they started with, we only want to look at options with 20% down and no MI. They ended up going with the 5% down, actually 10% down, because that's what I qualified for. So it's important that as loan officers and agents that we're having the right conversations with clients to advise them in the best way, because we don't want them making this person making a $6 million mistake over 30 years, right? So they just know that upfront that we're having those conversations more than just, hey, I got a rate that's an eighth lower and my payment's $8 lower, or somebody else is charging $5 less for the appraisal fee. Like we're talking, we're not stepping over dollars to pick up pennies. Like we're looking at the bigger picture to make sure that they're in a better position down the road. So I just wanted to show that to you guys first and foremost. And then, so Corey, with that, now I'm having Corey come on here because they're a property management company. And as real estate agents, you guys are more familiar with this than I am. I want you to fire questions at him that disprove why I believe they're so awesome. So Corey, get ready to get shot.
Hmm.
Um, I met these guys a year ago. The way I met him was one of my neighbor who's about 7 years older than me. He's like a big brother to me. When he started watching my online videos, he goes, "You remind me a lot of the guy that owns our company." And I was at a networking event, and this guy stands up. He's got all these processes in place. He's got workflows in place. He's got his stuff together. I meet him afterwards, and it's that guy. And it was Matt Simpson. He's the owner of property. What is it?
Freedom Property Advantage.
Freedom Property Advantage. Yeah. And we sat down. He read the book Traction. If you're running a company and you haven't read the book Traction, that's a must read. And he implemented Traction to the processes. Now, I personally have turned my properties over to him. So has my wife. My wife is super happy with him. I'm happy with him. We were looking at a property that we were going to get rehabbed, like it needed work. We were going to buy it for 70. We were going to put about $70,000 worth of work into it and then rent it out. He's also a general contractor. So he had a crew come in. They were going to do all the work. I was getting a renovation loan, and then I was going to rent it out, and they're going to get the tenants. They're going to screen the tenants. They're going to execute the contracts. They're going to do it all. So removing that friction for me was like, okay, I'm all gas. I don't have to hit any brakes right now. Like I can actually go own real estate faster because I'm not worried about everything else. And the price was right. And I don't want to say the price out loud. Corey, you can say the price, but the
Hmm.
price still kept me profitable. And I was like, this is crazy. Like it sounds too good to be true. So Corey, with that, like have at it. Like explain to them what you guys do and why it's beneficial and how it takes the friction out of people buying real estate and owning more real estate.
Yeah, absolutely. Jeff, one, I want to thank you on behalf of, Freedom Property Advantage and myself. We appreciate the time today and the opportunity to talk about this because we do believe that at the end of the day, we could really be that one-stop shop for investors in the Pittsburgh area that are looking to kind of take that, hands-off approach in some aspects. So who we are at Freedom Property Advantage, we are expert property management for investors who value communication, consistency, and results. I've worked in property management for a number of years now, and it's tough to come by a company that can do all of these types of things individually. Some of the ways that we try to strive to do that is through peace of mind through measurable outcomes. We guarantee 48-hour response times. We have biannual inspections because we always want you to be the utmost aware of what's going on at your property. Um, let's just say, for example, you have a property where a tenant has not moved in yet, or if you're just purchasing a property that you plan out to rent, we will go in and do a thorough property inspection of the unit, so you're fully aware of what that unit looked like, prior to a tenant moving in, and then also throughout the time frame of their lease term, we'll go back in there. We will do another inspection of the property to again make you aware of, hey, do we need to plan out some possible future maintenance issues? Do we need to address some things with the tenant if they aren't keeping up their end of the bargain? Those types of things again make you aware on where your rental property while being hands off at the same time. And as Jeff mentioned, our ownership, Matt Simpson, they are investors themselves. So we are truly built by investors for investors. So we know what it takes to grow and protect rental portfolios for the long term, because that's truly what we're trying to do is build up that long term approach.
And
Yeah, go
I
ahead,
was going to
Jeff.
say the one thing, the way Matt came about this, like, didn't Matt work with like a hedge fund company? He was a financial advisor or investor,
Correct.
and then his
BNY.
Yeah, and would say that again.
BNY, I believe, Mellon. Yep.
Yep. And his mother was older, and she was trying to like stay in her house, right? And
Correct.
she needed things done. Like he's trying to serve, like Bonnie, like your senior care, like your heart is in the right place. You're just trying to help the seniors. That's where he started too. And it was actually your networking event that I met him at. It was the senior care down at CNX. Yeah. Yep.
Yeah, you're correct, Jeff. We actually still run that company as well, so it can get a little confusing with it. That company is called Freedom Home Advantage,
Yeah.
where we go on a monthly, maintenance list to clients. So Freedom Property Advantage is in the similar aspect, but it's separate company. Correct.
Yep. So, any agents on here have questions for Corey about this piece of it to try to shoot holes in what I didn't find? I
Well,
know you go
I
ahead.
do have questions.
Yeah, yeah. Let's go.
Um, so I have my own rental properties and I cannot find a proper, I manage my own. Okay.
Mhm.
I don't have a property manager, but I do have clients that come in from out of town and they want to invest and they need a property manager. And I do not want to manage my clients' properties. Okay.
Yeah.
So I've turned them on to several property management companies in the Pittsburgh area, and they're a disaster. They're a complete.
Yes.
I'm being perfectly honest. This is why
Yes.
I'm on this
Yeah.
call today. Um, like I had one one of my clients, there was a trouble with the electric, like the electric went off, right? So instead of them like just saying, well, why don't you go down to the electric box and see if there's a breaker, they sent an electrician out. He flipped a switch. They charged him $300.
Yeah.
Okay. Like this is the kind of stuff that goes on. And there's always something, right? I had another property manager. He was billing, my son-in-law manages some properties and this property manager was billing for all the snow removal 2 years ago. We had 2 inches of snow.
Hmm.
It's
Hmm.
like, what is going on here? So, I'm very interested to hear what you have to say because I don't want my clients to get ripped off by property management companies that are charging them for things that they shouldn't be charging them for, overcharging them for things, and just helping them and being in the loop, like they're doing things and then they're sending a bill, right?
Right.
It's like, where's my cash flow this month? Well, there is none because they went and, did something, right? So I guess that's
Yeah.
why I'm here.
Yeah, no, absolutely. I appreciate you speaking to that because I've seen that myself as well. Being a property manager, just to give you some background, at one time I managed hundreds of single family, multifamily properties throughout the, East Liberty, Lawrenceville, Bloomfield area. And what I was seeing when I was doing that was, to your point, I don't want to say people, finding the nooks and crannies of where they can charge, but well, that's a little bit why we're different. So one, I want to start off with, we do a flat rate pricing of $125 a month. And I know that's a little bit different because a lot of times people will charge a percentage based fee. One of the reasons why we do that is because, to your point, we feel that or personally, I saw a lot of the times that a lot of the property managers are spending all of their time on the properties that are bringing in the most money. So they're, spending their time on the property that rents out at $3,000 compared to the one that's $850. And we didn't believe that that was right because at the end of the day, you're asking us to do the exact same amount of services, whether it be, inspecting the property, getting a listing together, showing the property, finding a tenant, doing the background checks, the screenings, getting a lease under contract, moving them in. The services don't change whether it's a $3,000 rental or an $800 rental. So that's why we try to be transparent about the pricing aspect. And to your point about maintenance, what we do is we require a $400 maintenance reserve per property. Now, some people, like that idea, but truly we're trying to protect the property with that reserve. Anything under that amount, we can go out there and address, whether it be a small leak, so it doesn't turn into a larger leak. And as you guys all know, there's not a whole lot of things that you can do anymore for under that $400 amount. So if it does go over that amount, we are constantly in communication with you and coming up with a game plan saying, hey, we have the ability to do this in-house, as Jeff has mentioned, because we do have a general contracting company as well, but we also have a strong network of vendors. that have worked with for a long time that are able to get quality pricing on some of these things. So we come up with a plan together on how we want to address that because every owner is different. They have different goals on what they're looking for and how they want to address things. And that goes back to our proactive communication. We just want to make you aware.
Okay. Thank
Yeah,
you.
and for me, Cindy, like the house I bought as my primary residence in 2008. When I moved out in 2017, I was renting it for 2,000 a month. And actually, I moved out in 2014. And then this tenant I have in there went in 2017 for 2,000 a month. I haven't touched the rent. I haven't moved it up. Like I become friends with my tenants, and I'm like, I can't scoot the rent up. Like I just can't do it. Well, they took over, I think at the beginning of the year, and the lease renews here in a couple months, and they're like, "Hey, the market rent for this is actually 2,400." And I'm like, "All right, let's like go to 2,249." Like the tenant calls me and goes, "Yeah, dude, I was waiting for you to raise the rent. Like you haven't raised it forever." So like they're paying for themselves the 125 a month that they're charging. So and they do it like methodically and they do it professionally. So it's not emotional and it's not personal.
Mhm.
And so for me, they're making me money because I would still be at 2,000 instead of the 2,249, but I'm paying them 125 a month. It's still profitable for me, and I don't have any headaches. Like they go through and they did an inspection of the property, like to make sure everything is on point, everything is right. They do it every 6 months so that you have eyes. I haven't been in that property since 2017. I have no idea what they did. I don't know if they're growing stuff or whatever they're doing inside that place, but they're in it every 6 months, knowing that that place is clean, right? And it's where it needs to be. So for me, buying that time back is priceless for me. Yeah, I'm going to lose more than 125 going out there to try to fix a water leak than I am just paying them to do it.
And that's exactly right, Jeff. That is something that I was going to mention today as well. On our website, we do offer rental analysis tools. So if you ever have a property that you're interested in and maybe acquiring in the future, you want to get an idea of what the rents are for a property like that in that area, or also if you already own a property and you think maybe I'm not getting the rent that I should be getting, we offer that service for free to kind of, again, make you as informed as you need to be.
Yep. And it said, what is their fee for managing? It's 125 a month. And you guys only do single family homes, right? You don't do multi units.
We do multifamily units.
Okay.
We are negotiable when it gets to the larger numbers of properties, but I will say the multi-units are on a case by case basis because there's just a lot more that goes into it. Sometimes there's common areas, common electric bills, common, gas bills, depending on the situation. So we do have to dive in a little bit more on those.
Okay. And then do you have a document that shows the list of items that are covered? And I know the answer is yes, because I've looked at all your thoroughness of all the documentation that you guys have. It's complete and thorough. But the question is there a list of items that are covered under that monthly fee?
Yeah, so that monthly fee covers two on-site visits performed per year, where some preventative maintenance is performed and an inspection report is delivered. So they'll go in there with the goal to do an inspection, and then if there's preventative maintenance that gets done, we'll take care of that as well. It also includes two exterior drive-bys that'll be conducted yearly, and then also formal tenant check-ins at 30 days and 260 days of the annual lease.
What any other questions? And Cindy, I'm with you. Like the uh, finding a good property management company was I was thought it was an impossible task. I'm like, there's just not one out there. Like they don't exist. Everybody claims to be a property management company, but nobody does their job.
Yeah.
And if they do it, then they overcharge. And when I met Matt, he actually has a business model in place. And yeah, so I'm a huge fan. That's why I was like, listen, we're all in real estate, and they don't teach us this stuff in school. They don't teach us growing up that you could build wealth through owning real estate. And even me, like, I was 35 years old when I bought my first house because my buddy's like, you need to buy a house after my son was born. And I'm like, no, man, I can keep renting. He was like, no, like, you need to own a home. And literally forced me into buying a house that I bought for $145,000 in 2008. And I share this story with every first time home buyer that I'm on a call with when you guys refer them, because I'm like, it's not just the first home that you want to buy. that just gets you in the game. Like you got to get in the game. But it's the second house, right? And we start talking about house hacking. Like buy this first house with as little money out of pocket as possible, live there for a year at least, or whatever you want. And then at that point, move up to the next house, put the minimum down, and then rinse and repeat that. Like at 53, if I knew at 23 that that was a game plan, I'd have done that 10 times before I was 30. I did it once and like I was forced into it. I bought it for 145. Today it's worth $400,000, right? My balance on it is 90,000 because the tenants have been paying it down. My mortgage payment is $1,000. I've been collecting $2,000 a month. That's $1,000 mailbox money coming in plus the tax benefits. Like nobody teaches this stuff growing up. And so when I talk to a first time home buyer, I'm getting them fired up that, yeah, you just got to get in the game. Like get a house that you can afford, get in the game. And then the next move is to buy up and start building wealth through owning real estate. And everybody's fearful of that friction of, man, how do I take care of tenants? I don't want to deal with the confrontation of the phone calls. I don't want to deal with the middle of the night toilets exploding. Like, how do I do this? And I wanted these guys on here so that they can take that friction away. And then you as agents can be like, look, if you have the financial means to buy more properties, we can take the friction out and you can hire a property management company to take care of all that for you. Um,
Absolutely, Jeff. And we are running into so many accidental landlords in this market nowadays, where people don't maybe or due to somebody passing or something like that, they have inherited a property and they don't know if it's the right time to sell. They want to keep the property, but to your point, they don't want to be the ones managing the tenants that late night phone call or I always say as property managers, we wear many different hats. You kind of just never know what your day can entail because you have to be responsible and be alert to all sorts of different items. So we take some of those issues away. And also it helps people in general when you don't want to deal with it helps give you financial clarity at the end of the day towards for the long run.
yeah. That's the other part is they itemize everything so you know your numbers. You're not sitting there trying to be a bookkeeper yourself. Like they send you the reports of what your numbers are. Bonnie, do you have a question?
Oh, I just referred somebody over to Corey for Property Home Advantage. They live in the state of California. An agent out there referred them to me because they were going back and forth. Should they sell their parents' house or should they rent? So I sat with them. We went over numbers. And they ultimately made a decision that they wanted to rent it out. So I recommended Corey, and I know last I heard it was a couple weeks ago that they were close to signing a contract with you, and they live in the state of California.
Oh, you guys do out of state?
No, no,
Absolutely.
no.
Oh, I'm
Oh,
sorry,
you
go ahead.
do? Okay, sorry. No, my people live. Their parents' house is in Mount Lebanon, but
Oh, got you. Okay. And because Bonnie,
Yes.
Corey, I thought you guys were just local.
No, right. No, that is correct. I mean, they own a property in Mount Lebanon to like Bonnie's point. So
Okay.
I met with them. I went over to their property, took detailed photos, gave them some recommendations on what I think maybe we can do to get this property up to market rent in the area. And to Bonnie's point, we have been in communication for a couple of weeks, but that's exactly it. And I want to speak to that as well because I know we have a lot of agents on this meeting is we are an active brokerage, Freedom Property Advantage, and we do offer broker to broker referral fees for any
Yeah.
agent that does end up maybe they have a client that's in a similar situation as Bonnie that maybe they want to rent out their property. We do $150 per door. For every contract that ends up getting signed, the agent gets that payment to broker. So that is a great way that we believe for agents to make a little bit of money on the side and then also give their clients a solution, a total solution for their future and their rental game plan.
And then there was a question here. Do you guys do renovation for flips? Like,
So
or do you
yeah,
only
so
do
that goes
renovation?
back
Yeah.
to our Freedom Home Advantage company as well. They are a construction company, so we do have the ability to quote out full renovations and flips as well.
And Lisa, to your point, when they walked through my renovation, they were like, "How do you want this done? Like, do you want this done as a rental? You want this done as a mid tier, or do you want this done as a primary residence?" Like, so, and I walked through the building with them, and amazing to watch. Like these guys have done it. They have experience. So it's not like you're working with people that just went to school for property management and like, hey, I think I'll take my hand at this. They like Corey was saying earlier, I don't know how many doors they have, but they have a ton. And this is what they do.
Hundreds. Yep.
Yep.
Hundreds.
Yep.
Who do I call for that?
So you would call me directly. I could put my phone number in the email and everything I have in the chat, if that would work. And then I'll also put the Freedom Property Advantage website in the chat as well.
And then there's another question that says, Corey, do you take pictures of everything to prove what the property looks like when they move in?
Absolutely.
And then take pictures of when they move out? Do you charge them for any damages for their security deposit when they move out? I love, love, love that question because I know that I would not do that, but I know for a fact that they do that. But yeah, go ahead, Corey, have at it.
Yeah, absolutely. That goes back to our inspections. We prior to somebody moving in, we want to make you aware of what the property's conditions are like. We will do a detailed report that includes photos in that report as well. And then also we do that in the middle of the term. We'll go back in there right around the time for renewal to get an understanding if they're going to be renewing, if that's somebody that we want to renew, and then do that follow-up inspection to give you updated photos of it. Because to your point, we aren't in the business to nickel and dime the owners. If there's maintenance that needs to be addressed, we obviously need to address it. But if there's something that a tenant is causing, or if they've caused damage to the property, we will 100% bill that back any chance that we are able to.
And then Corey, are you guys HUD approved? Like, are you familiar with FHA and 203K renovation loans?
You know what? I am not sure about that, to be honest with you.
Because we need that. We actually have one right now that's a 203K renovation, and we need a HUD approved general contractor. Can you find that out?
Absolutely. I will look into that.
And then do you charge for scratch or dents on a SS fridge?
Yeah, I believe we would do, there would be charges for that. I don't know if that would fall under a full replacement charge necessarily, but I think we would be able to try to get some money back off of that.
Yeah. Yeah, because I know of somebody that just had tenants move out and they went through with a fine-tooth comb and charged the client, like itemized sheet. So the client knew what the charges were. So it wasn't like, hey, we're taking your security deposit and the fight breaks out because they don't know what
Right.
but they itemized it out. They're extremely detail-oriented.
And that comes back to, we try to build long-term relationships, and that's not just with the owners, that's with the tenants as well. You know, as a third-party management company, we often find ourselves in that middle ground of, you want to please both sides. It's tough to do. We have to be fair and also transparent and straightforward. But to your point, Jeff, if you make your if you could detail out things like that and make everybody aware of and be on the same page, it really shouldn't get into an issue like that.
And for the agents on the call, where my head is going for buyers in the future, because we hear about first-time home buyers, they can't afford homes right now. And there's a few things that are transpiring right now that for agents, this could be a lane for you to have more transactions and help more people get into homes. From what I understand, I guess the moratorium on foreclosures is being lifted in August, right? So you'll see more REOs coming on the market that may need repairs. Now, Jenny Lennon joined our team a few months ago. She's out of Minnesota, comes with over, I won't tell how many years of experience because I'm not trying to expose her age. She got into the industry when she was 14, and that's not even a joke. Like, that's true. And, but she's really good with construction loans and renovation loans as well. Stockton hired, and we had him on the growth zone a few months back, David Hauser. He's done renovation loans since the mid 90s. And so Stockton brought in renovation in-house. So we don't have to depend on any third-party vendors for approval. And Jenny's really good at renovation loans as well. So you could find one of these REOs that need the work, and all we need is a bid for the labor and materials, and then you could do a renovation loan on it. They can close on it right now and get the work done later. And that's where these guys can come in to do the work, or if they have a general contractor that can do the work for them, they can do it that way. So now we can get people into homes, and hypothetically, say it's for sale for $50,000. And they got to put 50 grand worth of work in it. We get the renovation loan. The house is now worth 150. They're buying a house with equity already in it, and it's affordable instead of them trying to find something that's turnkey. So that's something that we're looking at to try to help people get into homes, because the main thing is getting in the game now sooner rather than later, so you can start building that equity. How do you get the money?
So let me get this straight. Corey,
Yeah,
you will do renovation loans.
We do renovation loans.
No, you will work with a bank. Well, it's Jeff that does renovation loans.
Yeah, I
Because
mean,
here's what I,
we're a licensed construction company, so I don't see any issues. I don't
okay,
know 100% what goes on behind that, but I believe we would be able to do that. Absolutely.
okay. I'm just curious because a lot of times on these renovation loans, Jeff, as you
Yep.
know, you have to have somebody come in and inspect it. So the bank will only release maybe only 10% of the funds to the contractor, and the contractor has to work for so many weeks and pay his people, and he's only getting 10% of the project. So that, and then once then they have to stop and get it halfway inspected, and then they release another percentage of the money, and then another percentage of the, so renovation loans aren't as easy as they sound, right?
No, I agree with you. They're as easy as they can be with the team we have at Stockton. And I'm not saying it because I'm here. I'm saying it because these guys are proven. They've done it.
Yeah.
I mean, they've had it. And the other thing at Stockton, they're allowing, which is crazy to me, they're allowing for like if repairs get called on an appraisal, they're allowing that to be escrowed. And it doesn't have to be weather related. It could be something small. And so even he was saying the smallest renovation loan that he had here was like a lady that wanted this really expensive washer and dryer. So like rolled it into a renovation loan for her. So it could be that, or it could be as big as structural damage that needs repaired. And all the draws, to your point, Cindy, are in house. And Jenny, can you speak to? I think Stockton has a process for how much they draw at closing for the general contractor, and then how much they do at the end. Do you
Yeah,
know that?
so I think there's kind of a, people get a little skittish of them when you talk about them because of the FHA piece of it. And so a lot of people have the standard in their mind where you're going to have the HUD counselors and things like that where they're going to be involved. And now they have the limited, which actually goes all the way to $75,000, as long as it's not anything that is structural or like plumbing stuff. But they also have a conventional piece that Freddie Mac has one too. So there's a lot of different options that make it a lot easier. And we typically allow for on our renovation loans, the builder gets to do, like at first draw, he'll get to do all the material costs for, to buy all the supplies and then a portion of the labor. And then he'll get to do another draw as well. So it's not as hard of a process as they used to be. I know that when I first started doing them years ago, it was a pain. It truly was. And anybody was like, you couldn't get anybody to touch them when you'd make an offer as a rental loan. But they're doing ours in-house, and like on a limited, they're saying anywhere from 45 to 60 days. And it's closer to 45. So I mean, they do a really good job in-house, and the process isn't as painful as it used to be. So I think, obviously there's a lot of houses that need just a little bit of love or a little bit of little bit of maintenance type, make it fresher, newer. And they can do that with this. So I think it's definitely a good option to look at when a house needs a little bit of updating.
Great.
Yeah.
Thank you.
Yeah. Yeah. It's not as scary as it used to be, for sure. Especially when you have people that know what they're doing. Yep. Did we answer the question? How do you get the money if the damage is more than the security deposit?
I don't believe we did, but basically, the first step is hopefully having that long-term and good relationship with the tenant. Obtaining a forwarding address definitely usually helps with tracking down where they're at and how we can collect the money from them. Obviously, there are situations where sometimes people just up and leave, and we try to resolve that. We do have a company in place that can run updated like background checks to kind of get updated information where people are, and then ultimately we would then send the balance to a collections agency if we were unable to collect it.
Okay. That's good. So good. Any other questions? Anything you want to cover, Corey, that we didn't talk about?
Let me just double check. I think we've covered a lot of it. The one thing I want to make sure everybody's aware is um, we believe that a strong criteria as far as when we do the initial leasing period, when we're trying to screen a tenant, we believe that a strong rental criteria and screening process can alleviate almost 95% of future tenant issues. That's why we do have such a strong leasing standard. We do the previous rental history checks, background checks, credit checks, eviction checks, employment verification, all the things that we're legally allowed to do, just like, when you're applying for a loan. But when you do those types of things on the front end, it just makes for a much stronger tenant at the property, and ultimately lower vacancy, because the vacancy cost of properties
Yeah.
is really what dives or eats into your profit at the end of the year. So
Yeah.
that is what we are always striving to do, is place a solid tenant in there, manage them throughout the end of the term, and then make you aware of the renewal options and the route that we could go in the future.
Yep. And then two things, and we'll wrap up here. We're actually going to finish close to on time. I try to keep these things to 30 minutes so I don't take too much of your time, but it's just all steak, no sizzle. All too often I see people going, "Oh, hop on this call. It's going to change your life." And then you hear it, it's all BS the whole way through it. I just want you guys to get on here, get some value that helps you grow your business, do better business, help more people, serve more families, and then just get out and get on your day. But two more things. One, let me give you a screen share here. We just launched our new website. So it's real simple. It's just jefflagoni.com. And when your people come here, they can do residential financing to apply online. We do commercial financing and we do creative financing. And if they want to hop into growth zone or get the growth zone reminders, you can hop in here and get it here. And it's super simple and it'll walk you right through. We just kept it clean and easy, nothing complicated. So it's just jefflagoni.com that you can save and send to your customers when you want to get them pre-approved. Just tell them click residential financing, complete the application, and it'll walk them right through it. And then the last thing is this. Who on this call knows who Jeff Hancher is? There's a few, right? Okay, I thought there was. So he just wrote a book. Did you know that? So he wrote a book. It's called Firm Feedback in a Fragile World. Now, I haven't read it yet, but I bought 7 of them because I feel like I've been in his mastermind group now for a while. Every time I go to one of his groups, I come out of there going, "Oh my gosh, I can't believe I just learned that much and it's impactful." Like, he knows his stuff. And so I bought the book I'm going to read it. Chances are I'm going to end up giving out the other 6 because I feel like if I could have all of his information condensed in a book, I feel like it's going to be a manual for me as a leader and as a business owner and, being in sales. And he just adds so much value and he's so good at what he does. So I'm not telling you to go buy it. Let me read it first if you want. You can buy it if you want. But I'm saying I'm going to read it first and then I'll give you guys a book review on it next month. But just know that that's out there and chances are it's fire. Any questions for me? Any questions about mortgages? Any questions about this industry right now, where we're going, what's happening, or anything like that? We're good. Well, thank you for joining us. I hope this was valuable to you. I hope it helps you help more families going forward. And if you guys need anything, we're here for you.